Hello. In this video, I'm going to go over what an EMA is, Exponential Moving Average, why it is an extremely powerful tool, why we use it in the systemation key, and why this is one of the key signals to indicate trend and where we're heading. So just before we get into the systemation key, I'll go through what an EMA is and I'll give you an example. So the EMA is the exponential moving average, and it is a popular indicator that's used to identify trends and potential buy and sell signals. I'll run through a simplistic point of view of that in just a second. An EMA is a type of moving average that gives more weight to recent price action, making it more sensitive to recent price changes. It's calculated by taking the average of a security's price over the past period with more emphasis on the most recent prices. So that's in comparison to an SMA, a simple moving average. I prefer the EMAs. I find them to be a little bit sharper with their entry points, and that's why it's part of the systemation key. The EMA is plotted on a chart showing the average price over the specified time period. When the price is above the EMA, it's considered bullish, and when it's below it, it's considered bearish. Okay, so I'll just pull up, this is Bitcoin on the weekly, and I'll just pull up a standard EMA. This is, you can look this one up, it's free indicator, just exponential moving average on TradingView. The length is 5 and needs to go into EMA. It was SMA. And as you can see, this is on the weekly. When price is above the 5 EMA, you don't have to be a rocket scientist to see that pressure's going up, and when it's below, it's coming down. So when price is below. At the moment, price is a long way below the 5 EMA, and that in itself is a little bit of an indicator in terms of what's going on, the fact that it's overextended. When the price is a long way away from the EMA, it often does retrace back to it like a magnet. So as you can see here, we had a trend reversal. It's back above and away you went. You could use this as a trading strategy purely in itself. So we'll just get rid of that now. The length of your EMAs vary on your timeframes that you're using. As a general rule of thumb, the EMAs that I like to use are Fibonacci numbers. I find that they have a high probability of crossing each other when you have two of them on the chart at the same time, roughly when your price is also meeting at the Fibonacci levels. It's not always the case, but it does happen. Fibonacci numbers are 1, 2, 3, 5, 8, 13, 21, 34, 55, 89. You can see here, they just basically goes through. I've written them down. There's a detailed video coming out about using the Fibonacci tool and Fibonacci numbers. If you'd like to learn more about that, I highly recommend that you take a look at it. And the 20, the 50, and the 100 and the 200, when you have those larger rounded off numbers, they're quite often used as well. Okay, so the way I use EMAs generally is when they cross, we can enter the trade. Now, this specific script, I'm not going to go into the specific strategy details on this, and it does have a lot of other parameters for it to hit, for it to also take a long, and obviously a short as well. You can see here that it's crossed, but it hasn't entered until down here. The strategy settings for this particular one have been created through quantitative analysis when I've used the systemation key basically to come up with the optimal result for trading this pair. But in general, if you find an instrument that likes to trend, ultimately a trending market is your best friend for EMAs. And when they cross, if you can come up with a strategy that's basically profitable. I'll just show you the strategy tester on this one. I think you'll see my point. Okay. Now, I've actually been live trading this now for more than 6 months. And yeah, that's what you see is what you get. That's the equity curve. I'll just go to the performance summary. The average winning trade is 7.52%, and the average losing trade is 3.89%. And the percentage profitable currently is at 75%. It's actually was lower than that. I think it was around 64% last time I checked in on this. But nonetheless, with the average high winning percentage, that's how come the equity curve's reasonably smooth. So you can use any EMAs that you like to form that cross. This specific strategy is using Fibonacci numbers. This video, I just wanted to emphasize that the reason we're doing it is because price mathematically can only go down when this is purple for an extended period of time, and then it can only go up when it's yellow. It's not going to go up when it's purple. Now, it does bounce. So for this recent trade action here, it's gone down and it does bounce. And this is a prime example of price being overextended and retracing back. But it's only retracing back below the previous breakdown level. So it's still putting in a lower high. So that was not indicating that this is a close the trade scenario. If we look back here, you can see, for instance, it's dropped down. Price has gone back to the fast moving, then the slow moving EMAs. It even crossed above them, but then it dropped again, come back, and price, as you can see, it's still just setting in a lower high. It's very difficult to see when we're zoomed out, but this is technically still a lower high, and the trend has remained downtrend with the purple. When trading lower time frames, for example, which I quite often do, like lower than the daily, if you're on the H4, the 4-hour chart, which is a brilliant chart for people who look at the chart twice a day, and I'll just show you the exponential moving average length here is 400, and we'll just turn it on. You can see down here that it's on, and I'll just want to mark the price level. So it's roughly around there, 0.048. If I go to the daily chart, just turn that off for a second. You can see that the 100 EMA on the daily is slightly just below. So the reason that is that the EMAs, they do move faster with price action. So on the lower time frame, it's pulled up a little bit closer, unlike the simple moving averages. But general rule of thumb is that it's in the same ballpark area. So if price comes back down to the 400 EMA on the H4, you are effectively very close to the 100 EMA on the daily. So it's sort of a big deal. You can see here where price is pushed up past, and then once it's broken past, it's like the algorithms realized, oh, it's time to go. So to just put that into perspective, once it got price, we'll go from the top of this candle up to here. That was an increase on this altcoin of 68.29%. So these aren't small moves. So yeah, it's kind of a big deal. It's pushed on up, and as you can see, it's put in a higher high and then a higher low and so forth, and it's moved on. It's chopped around for a long time here doing range trading. So yeah, keep in mind that the EMAs that you're using on your lower time frame also have the ability to line up with your higher time frame charts. In summary, the EMAs are a fantastic trading tool, and when combined with a couple of other indicators, they are extremely powerful in helping determine trend direction and when it's basically changing. And just give you a quick shield for those interested in learning about these trend trading strategies or a scalping strategy that I've got just here. I have a course coming out that fully details how to use the systemation key and basically create strategies like what you can see here on the chart, where you're in, you're out, you're in, you're out. This is a scalping one.